Martingale, good or bad? Now, this breaks into two things for me. Firstly, let me talk about what martingaling is. You might have heard the phrase before, and in trading or at roulette, let's say you bet black with 10, it loses, you then bet 20, it loses, you then might double it to 40, it loses, then you might go in at 80, it might win, pulling you back all of that lost profit. Now, like with roulette, you've got a 50% chance of it getting red or black. Well, actually just under, because they put some sneaky greens on there, right? You could run out of cash. Yeah, that's why in this instance it will have a shelf life, might work for a few data samples, but the more you do, the more likely you are to then just hit your good with unlimited money, but not if you've got limited cash. Trading is no different. Now, martingaling your lot size, let's say you're trading 0.5 and you scale into a position, you might increase it slightly. There might be, you don't have to double it, yeah? You could double it to 1 and then 2 and then whatever, but you're gonna run out of cash, yeah? Or you could go 0.5, 0.55, 0.7, you know, there could be a smaller increase, okay? There's no right or wrong with this. I'm just basically explaining that yes, you will run out of cash. That's why martingaling actually has a bit of a negative view in the trading space, and I get why. It's because people have been burned, they've run out of cash and they've blown their accounts. However, this can still work well, okay? This can still work well and be profitable as long as you've got a stop loss on your account in place. Yeah, you've got to know, because this will work quite a lot of the time, yeah? Like, you might get this range most of the time, but as soon as you get to this next stage, that's where you run the risk of running out of cash. So if it works within this sample for 100 and then one of the times it doesn't, that's okay, you're still profitable, right? And trading is the same. The thing with trading is markets move up and down, yeah, all the time. But when a market might go like that, it never really goes like that. There are still pullbacks along the way. There might not be a pullback for you to close your sequence. And if you relied then on hope, yeah, you've got a big problem. This is where people blow their accounts. So what you have to do is use a strategy like this, like what we do, and I'm totally fine with it, with an equity stop. Yeah, we have to know when, okay, this has gone too far. We've got a 3 or 4% daily limit on this strategy or this approach, maybe 4 and a bit, and we're out. That's fine. Live to fight another day. That should be your first priority with your trading capital, is not for it to rely on hope, is to have capital preservation at the first part of your mind. Strategies like this can work, so to say that they don't work is wrong. The reason they haven't worked for them people is because they've not managed their equity, okay? Hopefully that helps.